Krithivasan, the CEO and MD of TCS, which reported its fourth quarter and full year results on Friday. Joining me for this conversation is my colleague Debangana. Krithi, welcome to this interview on Moneycontrol, and thank you so much for talking to us on your quarterly
Pleasure.
as well as full year numbers. Krithi, if I have to take our viewers briefly through your numbers, you've reported a quarter-on-quarter revenue growth of 1.1% for Q4, driven by large deal ramp-ups. Operating margins came in at 26%, well above estimates. FY 2024 constant currency growth came in at 3.4%. But if I look at your deal wins, the quarterly deal wins were at a historic high, 13.2 billion, and the full year also ending at 42.7 billion. So on the face of it, Krithi, very good numbers on the deal wins front, on the margins front. But what is perplexing and intriguing to many people is this divergence that we are seeing between TCV and the revenue growth outlook. Why is one not converting to the other?
Chandra, this point we've been explaining for the last couple of quarters. While what we are reporting to you are the deal wins in a given quarter, and also we are quite happy the deal wins are converting into revenue. Recently, won deals, what are the revenue conversion has been satisfactory or following the historical pattern. But what is also happening at the same time is the our clients reprioritizing some of the old engagements, during FY22 or prior to that, whatever engagements we started. Some of them are getting reprioritized in terms of what is the capacity we put on those programs, or if, let's say, a program is supposed to have delivered 20 different functionalities. The customers look at, like, okay, the first five functionalities have been delivered. They have got the value they're looking for. Maybe the remaining 15 functionalities are not very important, or they don't deliver as much value. Then the clients decide that they can either wait, or they don't have to proceed with the rest of the program. So all those decisions are being taken, which results in reduction in people deployed, or the amount of work to be delivered to the customers in some of those old programs, which net means that the overall revenue growth is not consistent with the new project wins. But again, we said yesterday we believe FY25 would be better than 24, because that kind of reduction in, or the reprioritization of the whole programs may also improve, because given the fact that it's been happening for the year, and we continue to win new programs, we believe because of these two reasons, FY25 should be better than 24.
Right. Debangana?
Right. I have a follow up here. So, is the divergence in the deals and revenue growth that we are seeing, is it due to discretionary programs ending? And also, will the weakness we are seeing in discretionary spending kind of extend into FY25?
See, it is three things are possible, Debangana, here. One is definitely, like you said, that I explained, like where a particular program has 20 functionalities. Okay, these are all assumed it's all 20 are discretionary. The first five customer thought delivered the value. The remaining 15 customer may realize, yeah, they do provide a value, but maybe it's not significantly going to improve the situation. So they may decide that the further investment can wait. So that's one kind of discretionary program where you could see that there's a pause or slowdown. Or second, we have seen where there is in fact, the reason I'm giving this example, this is not a discretionary program. We could be doing some sort of a production support, but the production support may be running on a particular level of service level. The customer may decide that such a high service level is not required, meaning that if you have 100 people providing that support, maybe 70 people can do it with a reduced service level. So that could also be a reduction in headcount there. Or the third, we see the customer selling off a particular business, and so all the associated IT support also gets ramped down. So it could happen any of these ways. Discretionary spending reduction is only one such. But overarching theme is how do they conserve, or how do they reduce their overall spend and cost. So it can come, you're right, primarily it comes from reduction in discretionary spending, but it can come from other levers also.
Got it.
Right.
Chandra?
Kriti, one thing that really stood out this quarter was, the margin and execution excellence that TCS has showcased. 26%, way above estimates. You've literally squeezed costs, whichever way possible. But, your utilization now is 88, 89%. Subcontracting costs have sharply reduced. Wage hikes are going to kick in. Pass-through costs are going to come in from BSNL. We don't know if rupee will continue to depreciate. So putting all these factors together, where do you see margin expansion going forward?
Uh, See, the most important lever you forgot, right, of pricing, right? We have also not improved our pricing. Like we believe there is a greater opportunity to increase pricing going
I
forward.
didn't forget. I was going to come to that, but please continue on pricing.
So the pricing is one of the most important levers. We should continue to focus on pricing. We have not had a significant increase in the last few quarters, but even leave aside pricing, like on utilization, we have used to operate almost close to 90%. So I still believe there is some headroom left on pricing. I'm sorry, utilization. And similarly, like our employee pyramid, we can further tweak. And there are, even with all that, there will be some pockets, some projects where we may not be operating in the most efficient way. So we look for efficiencies where we can deploy our people better. So a combination of all these things would still help us. See, we've been giving 26 to 28% as our gating beacon. I think that would give us the headroom for improving it further.
In fact, I have a follow-up question on pricing, Kriti. Since you mentioned this, I think even yesterday in the analyst call, you mentioned this a couple of times that, price hikes will happen in a couple of quarters. What is giving you the confidence? Where do you see this happening? Because a lot of the project that you're doing are cost takeout projects. They are, in the maintenance category, not in the discretionary category. So where is this price hike going to come from?
See, again, Chandra, we are not talking about huge price hike, right? We are talking about marginal price corrections where we have not had corrections in a long while. If you look at the Indian market, our prices are probably more or less stable for a long period of time, whereas the inflation has continued to go up. So we would be approaching, like we would be looking for opportunities where we can price our services better by having better portfolio mix. Like if you're certain kind of projects give you a lesser price, but certain kind of projects where you can command a better pricing. So you need to adjust your overall project portfolio mix so that your pricing also improves along with that.
Right. I have a quick follow up here. You mentioned price hikes. So, with deal renewals coming up this year, will we see the price hikes kind of be similar across deal renewals as well as newer customers coming in?
As I said, it's deal renewal is not the immediate. Will not just because of the deal renewal, like we may not be able to increase the price. The price will go up with a better product mix actually. So we have to be very conscious on the product mix to improve the pricing. Deal renewal by itself may not help you. We will, yes, wherever there's an opportunity to look for cost of living increase, we do look for that. But that has a limited upside. Like, but we need, I think, a better product mix has a better upside.
Sure.
Right. Kriti, one thing I want to ask you on headcount. So, it's declined this quarter. It's declined for the year, perhaps for the first time in many years for TCS. And interestingly, this is the second year where headcount has lagged revenue growth. So, how should we look at net hiring for FY25? Will it go up? Or will the divergence only increase between revenue growth and headcount? Are we seeing some level of non-linearity kick in when it comes to headcount addition and revenue growth?
Chandra, 2 points. Like you, everybody keeps mentioning about the headcount reduction, but headcount reduction for the whole year is about 10,000 people, right? It's just about 1.5% of our overall headcount. So it's not as if it's our revenue went up for the year, like you said, maybe about 3%, 3.5%. Headcount went down by about 1.5%. It's not it's a great divergence that we keep talking about, which is compensated by the productivity gains that we have been working at. And also, there's always a lag between when you hire people and when they get deployed also. So I don't read too much into the headcount reduction. We look at the trainees, we put them through our own internal training mechanisms, and maybe after a period of 6 to 8 months, they become productive and billable. So there'll always be a lag. Into FY25, Milind yesterday mentioned that we'll be hiring very similar number of freshers like we did the year before. But the number of experienced professionals we hire, that's a flex, right? That we try to change based on the immediate demand. That decision we take on a quarterly basis. So the net headcount will depend on all these three, right? Like we are sort of committing on the number of freshers that will go take from the campus. How many EPs we'll take will depend on the demand. And the third factor is attrition. Attrition, we believe, is coming down. But these three factors that will determine whether we have a net headcount addition or reduction. I don't want to say at this time there will be a addition, but as we are committing as an organization on the trainee to intake. We have honored all the offers that we make. EPs we will calibrate as we go along.
Right. Kritik, quickly coming to your generative AI pipeline. So yesterday you said that your generative AI pipeline has kind of doubled in Q4 itself, and right now it is at some $900 million. So wanted to understand, where is this coming from, and will we see this same kind of pace continue? And also, how is the pricing going to be different for Gen AI deals?
So definitely, the more and more of our customers are looking at opportunities. We are working with our customers to see in their value chain where generative AI can deliver more value to them. So we go to them with new propositions where how they can deploy it better. So that's the reason you see and since a new technology, 900 million is still we are talking about the pipeline. It's a small number. So it has enough headroom to double or grow further. I don't want to say double every quarter, but enough headroom to grow very well. The pricing, again, since I talked about product mix, these are all some of the new technologies. So the pricing will obviously be better than the traditional technologies.
Right.
Krithi, when do you see double-digit growth returning to TCS?
I'll let you know once I see it.
I think Debangana has one final question. But Krithi, are you feeling better about FY25 versus FY24? Will FY26 be better than FY25? I mean, just want to know if the worst is over and, so-called green shoots are visible
See,
now.
we have, I think, we have said so many times since yesterday, we believe FY25 is likely to be a better year than FY24. I think FY26, I don't want to call at this time. But otherwise, we are feeling better about FY25.
Right. Kriti, was curious to know more about this part. So yesterday you spoke at length about the kind of growth you're expecting from regional markets like Middle East, India, LATAM. Although there's tremendous growth potential, the revenue is still kind of low. But do you expect revenue contribution from these markets to take away some of the dependency you have on North America over the next few years, let's say?
I don't want to call whether I want to take away the dependency, but we do want to ensure these markets may contribute to our revenue in a material way. Currently, it's a small number. We want to ensure that they contribute to our revenue in a material way, and they're rightfully, because these markets are growing quite well, and they are not under the same kind of growth pressure like the major markets. And we have very good offerings and solutions in these markets, and our success rates have also been very good. So we want to focus more on these markets.
Right. Yeah, definitely. I think it's already 10% of your revenue at this point, regional markets.
Yeah, about close to 10% maybe. Yeah.
Right.
Close to 10%.
Right. Krithi, one final question from my end. It was clearly an India shining story for you yesterday based on the BSNL numbers. And I think it's going to continue in the current fiscal as well. I think analysts are expecting 700, 800 million alone to come from that deal. Is that sort of how is that going to trend going forward? And secondly, this is you're sort of going to complete your first year as CEO, I think, in a few months' time. How is it being received? What changes we can expect from an organization perspective? What's your overall plan going to be as CEO, for this new fiscal year?
From a BSNL perspective, Chandra, I don't want to say what would be the revenue coming in every quarter. Like we, as we implement more and more towers, as we implement and activate more and more of them, the revenue from those from the deal keeps increasing. And we mentioned this before also. We look at it as a nation building project. So we don't look at primarily only the revenue. We look at how we are enabling the nation to get a new indigenous digital stack on 4G, 5G. So that's the way we are looking at that program. As far as me completing 1 year, it's been a great year for me with a lot of support from our customers as well as our associates and the leadership team. We made some tweaks in the last year. We'll continue to make tweaks as we think that's necessary to react to the market situation. But I'm not looking at any major changes or restructuring going forward.
I think that's all with our questions. Could be really insightful catching up on you. On that note, thank you so much for speaking to with Money Control once again.